Have you checked the price of gold and silver lately? It's been an absolutely wild ride, and if you've been paying attention, you know exactly what I'm talking about. We're seeing prices hit levels that have market analysts and everyday investors buzzing. So, what's really going on? Is this just a temporary blip, or are we witnessing a major shift in the financial landscape? Today, we're diving deep into the factors fueling this incredible rally. We'll break down everything from global economic tensions to what central banks are doing behind the scenes. And stick around because we'll also look at how this is impacting mining stocks and what it could all mean for your own investment strategy. Let's get into it. First, let's talk about the big elephant in the room: geopolitical uncertainty and trade tensions. Whenever major global powers start talking about tariffs, trade disputes, or economic friction, investors get nervous. And when investors get nervous, they often run to what they see as safe haven assets. Gold and silver have been the world's go-to safe havens for literally thousands of years. Think of them as financial insurance. When confidence in paper currencies or the stock market wavers, precious metals tend to shine. The recent discussions around new tariffs and ongoing trade negotiations have created a perfect storm of uncertainty. Investors are looking for a stable place to park their money, and gold and silver are fitting the bill perfectly. It's a classic flight to safety, and we're seeing it play out in real time on the price charts. This isn't just speculation. It's a historical pattern. When global stability feels shaky, the demand for tangible, time-tested assets like gold and silver naturally goes up, pushing their prices higher. But it's not just individual investors who are getting in on the action. One of the most significant drivers behind this price surge is something happening on a much larger scale: massive buying from central banks around the world. For years, central banks, especially in emerging markets, have been diversifying their foreign reserves away from the US dollar. And what are they buying? You guessed it, gold. We're talking about hundreds of metric tons being added to national vaults. Why are they doing this? A few reasons. First, it reduces their dependence on a single currency. Second, it adds a layer of stability to their reserves that is not subject to the policies of another country's central bank. When institutions with that much purchasing power enter the market and consistently buy large quantities, it puts immense upward pressure on the price. They aren't day trading, they're making long-term strategic allocations. This steady, large-scale demand creates a very strong price floor and signals to the rest of the market that the smart money sees long-term value in gold. This is a powerful trend that has been building for a while and shows no signs of slowing down. Now, let's turn our attention to silver. Silver is often called gold's little brother, and it tends to follow gold's price movements, but often with more volatility. So when gold rallies, silver often rallies even harder. But silver has a fascinating dual personality that makes its story even more compelling. On one hand, it's a precious metal, a monetary asset that people flock to for the same safety reasons as gold. But on the other hand, silver is a critical industrial metal. It's used in everything from solar panels and electric vehicles to electronics and medical equipment. This industrial demand is exploding. As the world pushes towards green energy and more advanced technology, the need for silver is skyrocketing. So, you have this incredible situation where silver benefits from both investment demand during uncertain times and rising industrial demand from technological innovation. This one-two punch is a major reason why silver's price has been so explosive lately. It's caught between being a safe haven and a high-tech commodity, and right now, both sides of that equation are on fire. Of course, we can't talk about rising metal prices without looking at the companies that pull these metals out of the ground, the mining stocks. As you'd expect, when the price of gold and silver goes up, the potential profitability for mining companies soars. Think about it. Their costs to operate the mine stay relatively stable, but the price they get for every ounce they sell is much higher. This is called operating leverage, and it can lead to massive gains in their stock prices. We've seen many gold and silver mining stocks outperform the metals themselves during this rally. Investors who want leveraged exposure to the rising prices often pile into these stocks. However, It's important to remember that mining stocks come with their own set of risks. You have to consider things like operational issues, political risk in the countries where they operate, and the quality of their management team. Not all miners are created equal. The majors, the big established companies, are generally seen as safer bets, while the junior explorers are much riskier, but offer the potential for lottery ticket-like returns if they make a major discovery. So while the sector is hot, due diligence is absolutely crucial. So, what does all this mean for the future? Are we at the top, or is this just the beginning of a much larger move? Many analysts believe that the underlying factors driving this rally are not going away anytime soon. Geopolitical tensions are likely to remain a feature of the global landscape. Central banks will probably continue to diversify their reserves, and the green energy transition will keep fueling industrial demand for silver. On top of all that, we have the looming specter of inflation and concerns about government debt levels around the world. Historically, gold and silver have been excellent hedges against inflation and currency debasement. As governments continue to print money to fund their spending, the appeal of real tangible assets with a finite supply will only grow stronger. This isn't just a short-term trade, it's a long-term macro trend. While there will always be pullbacks and corrections along the way, no market goes up in a straight line. The fundamental case for holding precious metals as part of a diversified portfolio looks stronger than it has in years. Looking ahead, it's crucial to keep an eye on a few key indicators. Watch the policy statements from the Federal Reserve and other major central banks. Their stance on interest rates and monetary policy will have a huge impact. Lower interest rates make non-yielding assets like gold and silver more attractive. Also, monitor the US dollar index. Generally, a weaker dollar is bullish for gold and silver prices, as they are priced in dollars globally. And of course, keep tracking the central bank buying reports and the industrial demand figures for silver. Putting it all together, the confluence of geopolitical risk, massive institutional buying, and growing industrial demand has created a truly powerful bull market for gold and silver. Whether you're an experienced investor or just curious about what's happening in the markets, this is a story you'll want to keep following. It tells us so much about the state of the global economy and where things might be headed next. Thanks so much for watching and for diving into this complex topic with me. I hope this breakdown gave you a clearer picture of the forces moving the precious metals market. If you found this video helpful and want to stay updated on market trends, make sure to hit that like button and subscribe to the channel. I'd also love to hear your thoughts in the comments below. What do you think is next for gold and silver? Let's continue the conversation down there. Thanks again, and I'll see you in the next video.